Three stages of becoming successful in trading. Mark Douglas Trading Psychology. Trading success doesn't happen overnight. It's a journey of discipline, perseverance, and personal growth. Renowned trading psychology expert Mark Douglas identified three key stages every trader must master to achieve success. In this video, we'll dive into the first and foundational stage of this journey, the mechanical stage. If you're a new trader, this is where your transformation begins. A stage that isn't about chasing profits, but about building a rock-solid process and mindset to sustain your trading career. Let's get started. The mechanical stage is often referred to as the beginning of your trading career. Why? Because it focuses on fundamentals, what makes a trader consistent and disciplined over the long haul. Think of it as your trading boot camp, where you don't worry about winning or losing. Instead, you work tirelessly on adhering to rules, controlling emotions, and executing trades with precision. In this stage, your goal is to cultivate discipline. It might sound cliché, but discipline is the cornerstone of trading success. This phase revolves around solidifying your basics and laying a foundation that will enable you to progress to higher levels of trading competency. Too many traders skip this stage thinking it's all about making quick money. But as Mark Douglas taught, there are no shortcuts to building a sustainable trading career. The mechanical stage is where it all begins. Before you can start trading with discipline, you need a well-constructed roadmap, a trading playbook. A playbook is your guiding document, a set of predefined rules that dictate exactly how you operate as a trader. It removes guesswork from your trades and helps you remain consistent, regardless of what's happening in the market. Your trading playbook should clearly outline several key elements. Capital allocation. Determine how much money you're willing to trade with. This could be a percentage of your overall portfolio or a fixed dollar amount, but it must align with your risk tolerance. Entry rules. Specify the exact conditions under which you'll enter a trade. For example, you might decide to only enter trades when a specific technical indicator aligns with market trends. Exit rules. Define when you'll exit a trade, both to take profit and to cut losses. Having clear take-profit levels and stop-loss points ensures you don't let emotions dictate your decisions. Risk management. Outline how much you're willing to lose on any single trade. Risk management will safeguard you from catastrophic losses. By creating your playbook, you're laying the foundation for a systematic approach to trading, a process that eliminates emotion and fosters consistency. Why is it so important to have rules written down in your playbook? New traders often fall victim to overconfidence or impulsiveness. Without predefined rules, it's far too easy to let emotions guide decisions, whether it's greed during a market rally or fear during a downturn. By sticking to your playbook, you neutralize these emotional extremes. Your focus shifts from obsessing over potential outcomes like making or losing money to simply executing your plan flawlessly. Remember, trading isn't about being perfect. It's about being disciplined. Your playbook is like a lighthouse guiding your decisions in unpredictable markets. When every decision is predefined, you remove the most dangerous trading element, emotional bias. Now that you have your playbook in place, the next step is perhaps the hardest: execution. Following your plan consistently and without deviation is where the mechanical stage truly tests you. Discipline separates successful traders from the rest. Mark Douglas emphasizes that during this stage, execution matters more than profits. It doesn't matter whether your trades win or lose. What matters is whether you executed them according to your rules. The mechanical stage is about building habits and refining your process, not about making money. Flawless execution has several key benefits. Builds confidence. Every time you execute a trade according to your plan, you gain confidence in your system and your ability to stick to it. Reduces emotional stress. By following a routine, you minimize emotional swings that arise from impulsive trades or gut feelings. Prepares you for success. The habits you build now will set the stage for even more advanced trading techniques in the future. When you deviate from your plan, it's a sign that emotions, fear, greed, or frustration are interfering with logical decision-making. Discipline ensures you stick to the plan regardless of the outcomes. As simple as the mechanical stage might sound, it comes with its own set of challenges. Many new traders face difficulties staying disciplined and adhering to their playbooks. The temptation to just try something else can be overwhelming, especially after a string of losing trades. Here's how to push through these obstacles. Discipline isn't natural for most people, especially when financial pressures or emotional stakes are high. In trading, reactions tend to be impulsive. It's part of human nature. Understanding this tendency and actively working to overcome it is crucial. One effective strategy is to develop a daily trading routine. This can include reviewing your playbook every morning, journaling your trades to hold yourself accountable, taking regular breaks to manage stress. By building habits outside of the market, you reinforce the discipline needed to execute flawlessly within it. One of the biggest mistakes new traders make is attempting to leapfrog the mechanical stage. They chase profits without understanding that skipping these foundational steps often leads to inconsistent and emotional trading. The result? Burnt accounts and shattered confidence. Always remember, the purpose of this stage isn't to make money but to build stability. If you bypass these steps, you risk entering more advanced trading stages without the structure necessary to sustain long-term growth. Despite the challenges, the mechanical stage is one of the most rewarding phases of your trading journey. Here's why it's the building block for your success. By following a structured plan, you reduce the mental and emotional strain that comes with decision-making under pressure. A predefined process gives you consistency, which ultimately fosters stability. Learning to follow your rules automatically trains you to control impulses. This newfound emotional control helps you remain clear-headed, even during volatile market conditions. The mechanical stage makes you sharper. It enhances your ability to recognize patterns, judge risk, and execute decisions with precision. Over time, these skills become second nature. When you've mastered this stage, you'll be ready to tackle more complex trading strategies. Without the strong foundation built here, sustainable progress in trading is nearly impossible. The subjective stage. Once you've mastered the mechanical, welcome to the realm of strategic flexibility. In this stage, your newfound discipline lets you tweak your strategies based on real-time market context. It's about informed adjustments, trusting in your disciplined foundation while allowing for nuanced decisions. This stage enhances your ability to respond to the market with agility and informed confidence. The intuitive stage. Trading now becomes second nature. This stage is the culmination of experience, where your decisions are swift and seemingly effortless. You're not just in the game, you're dominating it. The charts speak to you, and your strategies flow with the rhythms of the market. Trading is no longer just a practice, it's a part of who you are. In conclusion, every master was once a beginner, and every pro trader once struggled with the basics. The journey through these 3 stages of trading success is long but rewarding. Start where you are, use what you have, and do what you can. Remember, the path to success is a marathon, not a sprint. For more insights and to become the trader you aspire to be, subscribe to Online Trading Hub. Like this video, share it with fellow traders, and comment below on the trading topics you want us to cover next. Happy trading, and see you in the next video.